Mark Levine, XL Bradshaw Management Group. So we deal with a lot of property management topics, specifically in the New York metropolitan area. But one thing I haven't discussed yet is flip taxes, what they are, how to impose them, the benefits of them to the shareholders that are there. Now, you're going to see these in cooperatives. So a flip tax, if we break it down, it's a tax on the shareholders that sell their apartments. So it's going to benefit the long-term shareholders, the shareholders that are there for 10, 20, 30 years. They're not going to have to pay out of pocket anything until the day that they sell. Where this is going to hit is those shareholders that come in 2 to 3, 5 years, they're in and they're out, and that apartment changes hands a few times. So it's just extra revenue at the closing that the cooperative can basically take out of the sale and put that into the reserve fund to benefit all of the shareholders. And this is soft income, so it's not a reliable income because it's going to depend on the market factors. So one year in 2015, we had, let's say, 10 sales in the building. 2016, maybe things are changing a little bit. Prices are going up, perhaps. Maybe they're going down. So depending on the market factors, it's not a reliable source of income. So it's not going to be used for your budgeting purposes like your maintenance income will or your assessment income will. There's a few different ways to do the flip tax. You could have it as a percentage of the entire sale. You could have it as a percentage of the net profit. Let's say in 2010, a shareholder bought his apartment for $100,000. In 2016, he's selling it for $160,000. You could base that flip tax based on a percentage of the actual gain, the profit of that $60,000. You could have a percentage of that. You could also do it by a flat fee or a flat price per share, or just a flat fee in general. So I've seen buildings, and every building's different. Schedule A is going to say, how many shares are allocated to each apartment. Some maybe 3 shares, some maybe 200 shares or 500 shares. It really depends on how it was allocated at the time of the offering. But you could have that as a per share fee, and at least that way everybody knows going in what the flip tax is going to be when they get out. So that is one thing that is helpful. Now, not all buildings, cooperatives, are set up to have a flip tax in motion from day one. What you would have to do is amend the offering plan to include it, and the only way that you could do that, and I'm not a lawyer, and I haven't seen your offering plan, but most call for a change in the offering plan to be dictated and approved by a supermajority of shareholders. So that could be either 66.6% or it could be 75% in some cases. So what you would have to do in that case, if you read through your offering plan and you saw that it's not there and this is the tool that you need to get to that next step of approving it, you would have to place it out on the agenda of a special meeting or an annual meeting, and then you can actually have the vote there. And if it's approved by that 66 or 75% majority or supermajority, then it could be put onto the corporate record, and then every sale thereafter can actually have that accounted for, and the money can go into the reserve. So this is a little bit of a reserve fund boost, but everybody has to be on board. And if you have apartments that are constantly turning over, obviously the people that are knowing that they're only going to be there for a few years are probably not going to vote for it. But if you have a co-op where the people have been there for a long time and they are going to continue to be there, or at least in their mind they feel that they're going to be there, you may have a better sense of accomplishing the tasks. So I hope that's a helpful little primer. It doesn't go into the full details of the flip tax, but I hope it gives you a little bit of an idea of what it is and what you need to do to implement it. If that's helpful, if you want to follow us on social media, on Facebook, we are at facebook.com/XLBradshaw. On Twitter and Instagram, we are at XLBradshaw. I'm Mark Levine. You can email me anytime at mblevine@ebmg.com. I will answer every email you send, I promise, and it's free advice, so please take it. And we'll continue doing these videos, and if you have any topics that you want to have covered, I am happy to do it, and you'll see it show up right here. Till next time.